Welcome, Manthan. Welcome to the podcast. How are you doing?
Hey, Kana. Hey, I'm doing great. Thanks for inviting me.
Anytime, anytime. It's a pleasure to have you here. So, Manthan, before we start discussing about everything, can you just explain Gullak like you will have to explain it to my grandmother?
Interesting. So, Gullak is a mobile application that automates savings and invests these savings in digital gold.
Okay.
For example, you can set up daily, weekly, monthly some amounts. It will automatically debit that amount from your account, save that money, and buy gold at that day's price.
Okay.
Right?
Okay.
And apart from that, Gullak will also help you on extra returns on gold.
Okay. Okay. So, my question is like this is kind of a sip kind of thing, right? Daily ho gaya, but we are doing it every day, unlike every month or every quarter, like it happens in equity SIPs. You are basically trying to create a platform where I'm doing it on a daily basis, basically creating it like a habit, right?
Correct. Absolutely.
Got your point.
Absolutely.
We'll come to the
Absolutely.
extra returns in the later part of a podcast. And it is quite interesting because Gullak is offering 5% over and above the investment returns that you would otherwise generate from gold. Even SGB is able to return 2.5% on simple interest. What I could understand from my discussion before this podcast with Manthan is that this is compounding in nature and you get gold grams in extra returns as 5% over the gold returns that you get. We'll understand how it is done, what are the risks involved, and everything. But before that, Manthan, please tell me, where did it all start? How did you start? Like, from where did you do your schooling, college? Ultimately, what did you do in your job? And how did you decide to take this bold step of starting up?
Well, see, I come from a middle class family, born and brought up in Ahmedabad, Gujarat, right? Did my entire schooling, my engineering also from Gujarat, right?
Okay.
I did my computer science engineering, but like many engineers, right? I realized that maybe that's not the calling for me, right?
Okay.
So I started figuring out, okay, what else can I do, right? So I started looking for internships.
Okay.
So in Ahmedabad, there was a startup by an IIM Ahmedabad alumni. It was into market research for small and medium businesses. So till now, it was always for large businesses. So I joined there, worked there for 2 years, extreme learnings. And then obviously as a next step, I did my master's. I did my master's from IIT Kharagpur. And
great.
after that, from a year before, for 7 years, I worked with JustPay.
Okay.
So I joined JustPay when JustPay was less than 10 members team. They were initially building. So I joined there, started from the product manager to before I left, I was leading the entire cards and one-click division at JustPay.
Got it. Got it. So, what is like? Can you just explain what did you do in JustPay and what is JustPay all about?
Sure. So JustPay is one of the largest payments processor in India, right? JustPay processes, just to give you a scale, right? JustPay processes daily around, when I left, JustPay was processing 20 million transactions every day.
Great.
Okay, that's 600 million every month, right? So JustPay works with large merchants like Amazon, Flipkart, Swiggy, Ola, and power their payments, right? When I joined JustPay, so JustPay actually does variety of things, and I'll just talk about that a little bit. When I joined JustPay, I think my first big projects was Bheem. I don't know if you've heard about Bheem app, which was launched in 2016 by Prime Minister Modi. It was the first large scale UPI app. So that was built by us. So I led the product in that journey, right? It was a 10 to 15 member team building that entire product in 1 month. We had 10 million downloads in 10 days.
Wow.
Okay.
Great.
So JustPay actually does these things also. So we built Bheem, we managed it for 1 year and handed it back over to NPCI.
Okay.
Apart from that, in JustPay, I have also done a lot of 0 to 1 things. For example, there is a one-click card payment. It's called Visa Safe Click. Right? In India, when you do a card payment today, you go through a OTP process, right?
Right.
Two-factor authentication, right?
Right.
You make a payment, you give a OTP. Now, we wanted to make the experience extremely smooth for users and improve success rate for our merchants, because that's what we were
Okay.
doing at that time, right? So the next big leap was, can a user make a payment in one click, pure one click, right? So we worked with Visa, conceptualized a product and launched it in Flipkart, Ola, PhonePe, Make My Trip, whatever you can think of, right? Where within 5 seconds, without OTP, you can complete your payment if it is below 2000.
Right.
So I led that initiative also. And apart from that, JustPay today manages payments entire UPI stack for likes of Amazon, Google. So yeah, that's the scale that we have seen. So that's a little bit brief about my journey. In offline is not something. So offline was anyway easier because you are in person, you have your card. So it was
Right.
anyway easier. We
Right.
did it for e-commerce. So currently
Okay.
if you have a card, you can experience that in Swiggy. The same
Oh,
experience, that
okay.
one tap that you can have in offline, you can experience in Swiggy, PhonePe, Flipkart, MMT, all those places. So
So, okay.
that's where we are
Okay.
involved.
So in offline, it was already there. As far as the
Yeah.
online thing is concerned, that's something that you built.
Yeah. Offline is easy, right? Because you are in person available, your card is there. There is a way to identify that the same card is being presented. All this is there. But that gets complicated when you think of online, right?
Got it.
Because I am just entering my card number. How do I make sure that the user is same? How do I authenticate the user is coming from the same device? That's where the true innovation was.
Got it.
And this
Got
was
it.
first in the world for Visa also. So yeah.
Wow, wow. An organization like Visa, which sits in your wallet, like the physical wallet, I would say.
Yeah.
So
Yeah.
Manthan was behind all such innovations. Isn't that great, guys? I'm sure
Yeah.
it is. So coming to the next question, Manthan, I've heard that you just talked about your experience at JustPay. The founders of JustPay backed you when you started Gullak, right? So
Yeah.
it clearly
Yeah.
shows how hardworking and how intelligent you must have been while working at JustPay, that they are backing you. And alongside JustPay, Better Capital also helped Manthan and his co-founders raise about 10 crore rupees. That is approximately 1.3 million US dollars at just a seed stage. Even not even a seed stage, but a pre-seed stage, when I
Research.
think there was no product, right? You had just an idea, you had just done a research, and you raised
Yeah.
10 crores out of that. Am
Yeah.
I
Yeah.
correct,
Yeah.
Manthan?
Yeah, I think you're almost correct. We didn't have a product itself. We created few prototypes to test the experiences with the user. But
Okay.
you are right. It was without product.
How
Yes.
does this happen? Like the people who who build products have some kind of audience as well, but still are unable to raise that seed round. So how was
Uh,
that different in your case? Like if we talk about other founders and you, how was it different? And someone listening to this podcast, what should they do in order to, get their first check? That's something that I wanted to understand from you.
Okay. First disclaimer, right? Just having a first check won't solve all your problems. You have
Definitely.
to truly solve a user's problem.
Definitely.
That's when everything will matter. But yeah, it helps you give that buffer to be able to solve those
Absolutely.
problems which you are passionate about, right? So I think my simple suggestion would be, I think invest in yourself, right? See,
Right.
for throughout this 7 years, right? I and one of my co-founders, Dilip, both of us spent 7 years together at JustPay, right? I think one thing was very, very clear. We were very focused on learning every day, right? And doing continuously innovative things, right? Because of that credibility, because we have worked with NPCI, India Stack, we have worked with some of the largest merchants in India, right? We built Beam. We were managing India's majority of Google Pay, Amazon Pay, those kind of scale, right? Because we had done all that, there is a certain credibility that comes with it, right?
Right.
And that's when you talk to investors, definitely JustPay founders, we were very fortunate enough that lucky that we got the opportunity. First I'll say this very, very clearly, right? We were fortunate that we were at JustPay and we got opportunity. See, because in any company you work on you don't get a lot of opportunity to work in ecosystem products, right? We got
Right.
that opportunity. My co-founder actually wrote, if you know about account aggregator, open credit network, he wrote the spec for all of this with India Stack, right?
Wonderful.
So you don't get these kind of opportunities. So, but when you get this opportunity,
Grab
it
it.
brings credibility, right? You grab it, you work towards it, it brings credibility, and then, but that is not enough. Secondly, when you go to investor, you have to be absolutely clear about what problem you are solving,
Right.
because I think people are more attached to the solution than the problem, right?
Right.
I want to build this. Why? Whose problem you are solving, right? So if you are, I think, clear on those two fronts, and that's what I think happened with us. I can tell about my journey because we had some credibility and we were very, very deeply clear about what we were trying to solve. And that's where good investors back good people, right? I think we were fortunate, right? So I think that's what happened with us.
So to
We built,
summarize it, yeah. Yeah, yeah,
yeah,
please
go ahead.
continue.
So what we did was, I think we first identified a problem. We first proved that hypothesis. Is this problem truly for the people that we imagine that we are trying to solve? Is this problem truly there? We would have done around 150, 200 interviews
Wow.
just for proving that hypothesis, right? Once you prove that hypothesis, then how are you going to solve it? What is your theme? Obviously, no one knows on day one how their solution is going to look like, right? But what is the direction in which you want to solve it, and why you are the best team to do it, right? I think we had those answers ready, and that helped us.
Exactly. So that's what I was trying to summarize that, build experience. Don't
Yeah,
get, humiliated by someone else younger than you raising capital. 9 in 10 of those people might end up ruining that capital, right? So build that
yeah.
kind of experience, build that kind of, credibility around you. And then don't just think of a problem in your head that it's a problem, let me build a product around it and raise funding. So it's not that simple. If you go to VCs, they are going to invest their life savings, their limited partners life savings, right? they're
Absolutely,
gonna
absolutely.
they're gonna grill you out of that. So you need to understand that if a problem exists in your head, it should exist in the people you are going to
Users.
interview, like your target audience's head as well. Like it should not just be your problem, it should be
Yeah,
India's
yeah,
problem, it should be the world's problem, right? So, and which is
yeah,
the
yeah.
kind of category you're looking at. Take those 150 200 interviews, and that's how you will understand what you are going to build. So if you have thought of building something in your mind, just just interview 150 200 people and you will be able to come up with a much better product. Not just, of course, you're going to solve a good problem that gets validated, but how to design and build that product is also something that you can get as a return of the time invested in interviewing these peoples. Not just the validation, but this thing as well, that you get to understand
Abs-
what they're trying to build, right? Am I right, Manthan?
Absolutely. 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 I think when you are connected with the user, you know your hypothesis that you have built in your head, right? All
Right,
get validated when you talk to them.
right,
That,
right,
oh, but I was thinking. But one thing very clear is you have to be honest with yourself. Don't try to twist the question such a way that you get the answers that you want, but be
right,
very, very honest that, okay, what I was thinking is wrong. This is not the problem, that then try to understand what is the true problem there. So,
right.
yeah, I completely agree with you.
Don't seek pleasant feedbacks. Like in India, if I talk particularly about India and Southeast Asia, the problem with us over here is that no one is very comfortable in saying no. So at many a times you might get a feedback which is actually not true, right? So you need to ask your friends, if at all you are interviewing them. First, try that you don't interview your friends for these products. Interview someone who's not a related party, right? And try and interview neutral people, and just tell them, even if you're interviewing friends or you're neutral people, give me brutally honest feedback. Because a brutally honest feedback is only something that's gonna make your product look like gonna solve problems. If you're asking people something to listen to, yes, then that's gonna be a problem. And even if people say yes without you having that kind of intention, that
How do
becomes
you
a problem.
validate?
Yeah,
Yeah.
that's not fair validation, right? So
There is one very interesting book, Karan. It's called Mom Test.
right,
Okay.
right,
See, if you ask your mom, am I doing good? She's always going to say yes, right? How to not get into that trap? I think users who are interested should do this. But again, disclaimer, by raising capital, that's just the
Starting point.
zeroth step. Zeroth
Right,
step. Your true problem starts. The problem that you had in your mind for the users that you wanted to solve
right,
that.
right,
Yeah.
right. And
One very interesting
yeah,
thing, Kanan, I
yeah,
think since we are on the topic, uh, that we learned during the journey was it's a analogy by Michael Sibyl from Y Combinator.
okay,
It's like when you are building a screwdriver, right,
right,
to fix something.
right,
If you are not able to fit the screw,
right,
don't use that screwdriver to do something else, right?
okay.
Build a better screwdriver. It's don't get attached to the solution, right?
Right.
But yeah, I think we are also in our journey. I am not somebody, I have not completed my journey to be able to say this, but yeah, sharing whatever we have learned so far.
So the idea of this podcast is to help people who come from, not so lavish backgrounds of the top B schools, of the top engineering schools, or all those kind of stuff, and understand how to validate a business idea and how to raise capital. So this podcast is
Absolutely.
actually for them, and which is actually our target, right? Because you are
Excellent.
someone who has been just in the first year of your journey or the second year of your journey, and you will be able to explain things much better in than a founder who has been in this journey for more than 10,
Abs-
15 years, because your
Yeah,
memory is absolutely fresh. So that
yeah,
definitely
yeah.
helps us, Manthan. So
Absolutely.
coming forward to our next question, like you raised money from Y Combinator. What I understand from the public disclosures is that you raised money from Better Capital and Justpay founders in January 22, right? And around
Yeah.
July 22, you raised money from Y Combinator. Generally, what we see is Y Combinator takes X percentage of your equity for $1 lakh of check, if I'm not wrong, and then that happens at the first stage. Like they are the pre-seed, they are the first, generally the capital infusers, right? How was it different in your case? Like, of course, the kind of valuation you would have had. Of course, I'm not asking for the valuation, but like you raised it 6 months later. That's not something we generally see in the Y Combinator space. So how was that different for you? How did it materialize ultimately?
So I think, see, our goal is very clear, right? We are you've taken venture capital, you want to grow fast. Whatever helps you get to PMS faster, there is no doubt about it that we are going to do, right? You started two journeys yourself, right?
Right,
So the reason for, I think, very, very clear about Y Combinator. See, Y Combinator has invested in 5,000 companies. There are a lot of known unknowns that they would know,
right.
right? There is a one very interesting analogy by someone that I read. It's like when you are starting a startup, there are a lot of mines, right?
Mm,
Your idea is try to avoid as many mines as possible because it's there.
right.
So Y Combinator may not help you cross that path, right? But it has a proper blueprint of mostly where the mines will be. So you can avoid that. And our partners, Michael Sibyl, Gustav, who was an early Airbnb growth guy, they personally would have invested in 1,000 plus startups, right?
Mm,
So
mm,
they know these known unknowns.
mm,
So I think for us it was extremely helpful because that helps us get to PMF faster, right? And in terms of the structure of YC, I think it's a little bit different than what you said. But yeah, I think if you're asking about the theme of why we chose YC was that.
okay, okay. And they were
Yeah.
comfortable in getting lesser equity for whatever amount of check that they gave. I think they gave you $100,000, if I'm not wrong.
No, I don't think they do that. So what they
Okay,
do is, I think this is a detail. I think it's available publicly
okay,
how YC does their checks. They do a particular part 125K for a certain percentage, and then they do other part at whatever next seed round valuation
okay,
that you raise. That's
okay.
how it
So
is.
it was for
Yeah.
you, it was the second part, right?
For us, it was normal. It was the
Okay.
deal like it is for everyone. It was
Got
for
it,
us.
got it, got it. That's great. That's great. So, Manthan, coming forward to your to from where we started the podcast, right? You are promising your investors 5% more, right? Beyond gold returns. Like, of course, we have had bad instances in the past. Like, if we talk about Vault, right? they were also offering fixed return, and many people said and endorsed that as saying that there's no risk involved. So we'll definitely come to the risk part, but let us understand what is this 5% extra. How are you able
Got it.
to do that? We'll come to the risks later on, but how are you able to
Absolutely.
do that, and in what form do investors get that?
Got it. Got it. So first, I think we need to understand that what is gold plus, right? So gold plus is whatever your invested quantity is. Let's say you have invested 100 grams of gold,
Hmm.
right?
Hmm.
Every year you will get 5%, which is 5 gram extra gold as a return in
Hmm.
grams,
Hmm.
right? That's the product, right? Your natural question will be how,
Hmm.
right?
Hmm.
So there is an age-old practice called leasing, right?
Okay.
Where it was only available to a closed few ultra rich. So that practice was you can give your gold, which is sitting. So all our customers' gold is sitting idle in Augment and their third party's locker,
Okay.
right? Everybody says that your money should work hard for you, right?
Right.
Same way, your gold should also work hard for you and earn for you, right? Our vision is to create wealth, democratize wealth creation, right? So how do we do that? So what happens is there is this old age-old practice, right? Is where you give your gold to jeweler, and jeweler gives you this 5% return in gold every year.
Okay.
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 Now, why would a jeweler do that,
Right.
right?
That's
Because
my question. Yeah.
because like for everyone, every business, what is their working capital? They need to make jewelries, so they
Hmm.
need gold, right?
Okay.
So their option one is they take a normal recourse where they go and take a loan at 10 12% or whatever their credit score is, right? They take that loan, then they buy gold, and then they make jewelry from that, right?
Okay.
Versus they take users gold, and this is much more efficient in terms of it costs them much lesser, right?
Okay.
And they pay 5%,
Okay.
right? So that's where this is, when you understand truly how it works, it will make sense that okay, why not? But the problem with this practice earlier was it was only available to a closed few. You need to have 1 kg gold, otherwise jeweler would not talk to you, because he is building in quantities, right? So you
Right.
need to be ultra wealthy.
Right.
Secondly, you needed to trust jeweler, right? Okay, I'm giving to this jeweler, I know about them, I know their history, so I trust them, right? How do, when we build a product for scale, right, we have to remove that. We have to build a product that they can trust, right? So we added an element where they have to give a bank guarantee of 100% of the value
Hmm.
that they do.
Hmm.
So that trust element is removed, and minimum quantity, because we are a tech platform and it is democratized to thousands of our users, right?
Hmm.
Everybody investing 1 gram also, we reach that quantity. So we start with minimum 1 gram, right? So all both of these problems we have tried to solve. So
Hmm.
in a way, you should think gold has historically increased by 10 to 11%. You take any period, right? Add 5%. So
Hmm.
gold can give you now 16% return, which is equivalent to most mutual funds in India,
Got it.
right?
Got it.
So that's what we are trying to do.
Got it. So, like, I'll ask a few more questions. Like, I didn't get that point very clearly. Like, I'm sorry, not the builder, but the jeweler needs certain kind of inventory, right? But for him, the inventory is physical gold and not digital gold. So, right now, we are giving him
Oh,
digital gold, right?
no,
So, how
no,
does
this
that
is
act as
physical gold.
inventory for him?
Okay, so maybe some base concepts, right? Base how digital gold works. So
Hmm.
when you invest any amount in digital gold, it is
Hmm.
actually backed by physical gold.
Okay.
Every purchase, that's why you pay GST, right? You
Right.
buy that physical gold and that is stored in a locker. Now
Okay.
this is sitting in a locker, and that was our
Okay.
current product till now.
Okay.
Now that gold goes to the jeweler, which is physical in nature,
Okay.
and that they will be able to use it and return.
Got it. Got it. So the amount that they raise from the banks, that is at 10 to 12%. Like, against what do they raise it? Do they raise it against their own gold, or that's unsecured funding per se, because unsecured funding, I believe, is a lot more expensive, and for jewelers it will be all the more expensive. Around, it
No,
might go
no,
as high
I
as
think
20 to 24%.
yeah. I think for jewelers also, when I say 10 to 12%, assuming they give collaterals and all that, right?
Okay.
Like any businesses, that
Okay.
credit line is there, right? CC for any businesses.
Okay.
So that will have that collateral and all that also. Without collateral, unsecured, like you said, that amount will be crazy. That I don't think. But assume with collateral also, they
Hmm.
are getting it at 12% interest rate.
Hmm.
Now, with that, they are going to buy gold only again
Got it.
in
Got
a
it.
large quantity at one point and pay GST at one point, right?
Hmm.
Rather, they will use this gold
Hmm.
and they will have to pay, let's say, 5%
Hmm.
only
Hmm.
as a gold return to the user. So it is much more efficient to them. On top of that, if I ask them bank guarantee, which will cost them 2%, they'll be
Hmm.
still okay, right?
Okay.
Because it is very cost effective for them. And at the
Hmm.
same time, you would think, right, that this is so
Hmm.
obvious. Why did nobody do this?
Got it.
That's how it happens, right? These are age-old practices which were available, but
Got it.
no B2C app has taken
Got it.
that digitally yet.
Got it. Got it. So that's one thing. The other thing is, like, of course, if it's not confidential, then only answer. We do not have any intention to, extract anything that is privy to your business. So, like, you are giving gold at the market rate. That is one. Second, you are also giving the 5% interest. Then how does ultimately Gullak make money?
So Gullak makes money every time you purchase a gold, right?
Okay.
We make a very small percentage, right?
Okay.
Any jeweler has their own margin when you buy gold, right?
Got
That's
it.
how Gullak make money.
Okay.
Honestly, in Gold Plus, currently we are not, because we want to promote the product, so we are giving everything that jeweler is giving back to the user. But eventually, here also a small basis points on annual AUM. You understand
Got it.
mutual fund business, right?
Got it.
That is
Yeah.
what Gullak will make.
Yeah,
Yeah.
yeah, got it, got it. So, fine, got your point. That's fair enough. So, like, see, we are just talking about gold, and with 5 more percent, you will make gold even more attractive. So, is gold becoming sexier again, if I have to put it that way?
See, I would say it has always been. See, gold
Hmm.
has been a very rock solid instrument if you see. So there are data available from, let's say, 1930s also, where you can see historically
Hmm.
CAGR of gold has been around 10 to 11%. Pick any 10-year period,
Hmm.
right?
Hmm.
I'll give you a very interesting fact.
Hmm.
Last 10 years, gold has beaten Nifty 50.
Hmm.
Okay. Last 5 years, gold has given 16.8% CAGR.
Okay.
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 Forget 5, 10 years. From the
Okay.
time Nifty started, from the time data is available online on Google,
Hmm.
right?
Hmm.
1999, January 1st, right?
Hmm.
Nifty CAGR has been, Nifty 50 CAGR has been 14%.
Hmm.
Gold's
Hmm.
CAGR has been 12%.
Okay.
Plus 12% plus, right?
Hmm. Hmm.
Now add 5% extra, right?
Hmm.
That is like return of the most mutual fund. So it is
True.
as lucrative. So I would say it has always been very rock solid, but now it became a no-brainer.
Manthan, coming to my next question, what is your basic target audience and how do you acquire customers? Like, how do you do that? Because it's the toughest part in startup building, that how do you
Absolutely.
ultimately bring customers to the table?
Absolutely. That is the make or break of any startup, right? So I think our vision is to create wealth for everyone, right?
Hmm.
But our early adopters are age 27 plus
Hmm.
who are earning greater than 5 lakh a year, because this particular audience has intent and ability to save,
Hmm.
right? Because that is very important. Otherwise, you are trying to solve two problems at once.
Hmm.
किसी को teach saving also and bring them to your app also. So that's our early adopter.
Hmm.
But with Gold Plus, we are opening up the top 2% also who invest in mutual funds,
Hmm.
not the trading options, the whole hardcore stock market audience, right? But whoever is investing in mutual fund, that audience also opens up. And eventually we'll open it up for everyone. As far as the acquisition strategy is concerned, I think, like you said, right? I think acquiring at low cost and being sustainable is the biggest problem in the industry, right? So
Right.
our focus has always been on acquiring as much as organic. and referral. So I think currently 50% of our audience is referral and organic.
Wow,
right?
that's great.
And we also work with influencers. We there is performance marketing also that we do on Google, Facebook. But idea is use that as a catalyst, right? And always focus on building sustainable growth mechanism. We are working on few partnerships also where one to many model is there. Might not want to reveal that, but idea is sustainable. Low
Got it.
cost acquisition has been our core focus from the beginning.
Got it. So the crux is that build a product that people themselves want to refer to others. And of course,
So,
as a catalyst, you
correct.
can try and get to influencers to get the early traction. But as far as long-term sustainability is concerned, and if we look at
Absolutely.
any successful startup that has been there, it has relied on word of mouth marketing. It
So
doesn't,
we
yeah,
what we call that, Karan, ambassadors of Gullak.
okay.
If our focus is
Yeah,
that ambassadors of Gullak will talk to others, then
right.
it doesn't only solve acquisition, it solves retention also, it solves word of mouth, it solves everything. So I think our core focus has been that from the beginning.
Got it. So how does Gullak look at its peak to you?
Interesting. See, we are very inspired by, and since we were part of that journey in UPI, right?
Hmm.
What UPI did for payments,
Hmm.
Gullak will do for wealth creation, right? To put it in more quantifiable terms, right? The other 200 million people who are not investing in, who are investing in non-wealth creating instruments. See, I come from middle class families, right? I have seen people invest in FD, LIC, post office, which are not even beating inflation. Forget about creating wealth; they are
Right.
losing their wealth, right?
Right.
Just because that awareness is not there, what is inflation?
Hmm.
Just because power of compound interest is not known to everyone, right? And they are paying the price. So our idea is next 200 million people who are investing in non-wealth creating instrument, they should invest 30% of their savings in Gullak and create wealth at 12 to 15%. That's our vision.
Great. Great. So there are other products in the fray as well, or you are going to focus on gold only?
So yeah, I think we are just getting started, right?
Okay.
There are a lot of interesting products that are coming up. Current focus absolutely is on Gold Plus and bringing SIP in that.
Hmm.
But there are a lot of interesting things coming up, but with the same focus: create wealth, keep it extremely simple for users. Users doesn't need to have extreme advanced knowledge, financial literacy, and all that, and still they should be able to create wealth. That will be
Got
our
it.
focus.
Got it. So I absolutely got your point. So this is one thing. The other thing that I wanted to ask, like it's the last question of our podcast. What percentage of your portfolio is in gold?
Okay. I think about 25 to 30%.
Wow, that's great. That's a
Of my
sizable
portfolio.
amount, and which is actually, if I don't have to sound like an investment advisor, like hedging your equity portfolio is also important. And just the way Manthan mentioned, it is going to give you 5% extra returns if you invest with them. Of course, understand the risks involved over here, understand the returns that are
Absolutely. Absolutely.
involved over here, and then gradually, maybe if not by starting right away with 5 lakhs kind of investment, start small. Think if you really think that they're going to do good, then invest maybe more sizable capital. That's up to you. So thanks Manthan, thanks for your time, and it was really great having a chat with
Absolutely.
you. I'm sure our
It was
audience would have
pleasure.
learned a lot about customer acquisition, fundraising, and idea validation, most important of all that, right?
Yeah,
So thank you for your time. Hope you have a nice day and all the
absolutely.
best with good luck. I
It,
really wanted to
it
see you
was
become like Zerodha or some great
awesome.
startup like that.
Awesome. It was pleasure, Kanan. And I hope apart from those things, I was able to also break some myths about gold, right?
Absolutely.
Which a lot of people have that gold should give 3-5% return. And they look at gold seriously, do all the risk analysis and everything, and then invest wherever they like.
Right. Chalo. Thank you.
Awesome.
Thank you, guys. Thank you for watching this podcast. Thank you and have a nice day.
Uh,
Bye.
Bye.